Good morning, Vasilis Jurasis for Trader24. This morning I'd like to discuss a couple of graphs that we posted on our Trader24 website yesterday. And I'd like to begin by just summarizing quickly on the S&P. We did mention that a break and hold above the 1340 would be bullish, but I also did say that should Bernanke disappoint, we could see a sell-off and we could see the 1340 level breach to the downside. It seems that this was the case. We did have a false breakout above the 1340. The S&P now well below that level, and my target on that graph is around about the 1310 mark for the short term. And should that level be breached further to the downside, I'm expecting a retracement to about 1285. We also mentioned the FTSE. I did say that I'd be a buyer above the 5,550 level, and I'd put in some more longs on a close above 5,600. Again, FTSE, another false breakout, well below those levels at the moment, and I think my target on the FTSE now would be closer to 5,260. Two new graphs that we added on the website yesterday, and I think are very relevant and significant, purely because they are heavily weighted in commodities. And as I've mentioned before, the SA market being a predominantly resource-based counter, I think these graphs are significant. I think they can give a very good indication of where our market is to head in the short term. The first one, Toronto Stock Exchange, heavily weighted in commodities, as I mentioned. Also, possibly extra evidence that things are not very well in China in terms of commodities. It has a classic head and shoulder formation created over the last 30 months or so. And generally speaking, when we see a formation that is as big as this and has lasted for as long as this, it generally is more reliable. If you excuse the crude visual for the moment, I'll just try and see if I can show you what the graph looks like quickly. Right, there we go. You see the classic head and shoulder formation, and should that neckline be broken, we see the possible target of about 8,200 to 8,000 level. My strategy on this one is to go short below 11,000. I'd have put in a stop loss of about 11,500, cut half the position at about 9,500, and the balance at 8,500. As I mentioned before, the classic target over here would be around about the 8,200 to 8,000 mark. An alternative strategy on this one, take along at 11,300 after the index has broken down but comes back up, as this could present a false break. Should this occur, we could see quite an aggressive rally to the upside, which could be quite significant. Another graph, the other new one that I'd like to discuss, the CRB spot. Again, head and shoulder formation on this one, another heavily weighted commodity graph. Maybe not a classic head and shoulder formation, but certainly one that is discernible. And again, potential target there, low 365 to 370. Let's see if I can just put this one up for you and give you a quick visual. Right, there we go. Again, as I mentioned, not a classic head and shoulder formation, but clearly you can see that should that support line be broken, we could see a retracement of all the way down to about 365, 370. Not a classic head and shoulder formation, but generally speaking, when we do see, when we do talk about a head and shoulder formation, we need three rallies, with the last rally not making a new high. And that's pretty much what we have here. Strategy on this one was to go short on a break below 465. I'd put a stop loss in at 485. I'd cut half the position at about 410 and the rest at 380. Again, as I mentioned, potential target 370 to the downside. Well, things are certainly not looking very good this morning. I think we could see some more weakness in our market, certainly some further downside. At the end of the day, I think it's just on the back of fears coming out of Europe again, and we need to see the European markets come out with some kind of bazooka. We need to see the G20 come out with some news to bolster these markets. Otherwise, certainly more downside as far as I'm concerned. Vasilis Jurasis for Trader24.